Societe Generale then joins us on the phone line from London. Robin, hi, good to have you. What's your sense that you make of the base metals first of all? Because most people feel that they have bottomed out, and from these current levels, we actually could see much more gains.
Yes, I would generally agree with your comments. I think the easing expected by central banks globally, so keeping monetary policy very supportive post the UK's planned exit from the EU, should continue to underpin base metal prices. We are more positive towards some of the smaller base metals like zinc and nickel, tin and lead, more cautious on copper and aluminium because of still oversupply in both of those markets.
Zinc and nickel is something that really has been gaining up, and we have seen a lot of smart, hot money move into these couple of metals. How much of a further gain would you see in these?
I think we can expect some further gradual gains. Admittedly, some of the gains have come, I think, too quickly because it's been based on fund buying, speculative activity, jumping on the bandwagon. So we should expect maybe prices to level off. But I think in the fourth quarter, when we should see physical demand picking up after the slow summer period, we could see some further gains, particularly in zinc and nickel, because of ongoing supply constraints. We're seeing some closures of zinc mines, and in nickel we have the threat of mine closures in the Philippines to add to the already existing export ban by Indonesia. So we would expect further moderate gains, certainly in the last quarter of this year.
Would you really want to quantify that, Robin? Do you see 10 to 15% kind of gains, or would that be less than that?
I think that sort of magnitude, 10% or thereabouts, is likely. That's certainly, I think, what we would project for the remainder of 2016, both for zinc and nickel. My only concern would be that for both metals, inventories, both for refined material but also raw material inventories, so concentrates and other semi-finished or semi-refined material, still relatively high, so that might act as a brake on some of the expected price gains that we are seeing.
Robin, how would you look at the precious metal space? Because while, of course, gold did start as a safe haven, the kind of run-up or the catch-up that silver has done clearly has outperformed that sector. What's your sense on silver now? Is it really following gold, and because it's a smaller commodity tends to run faster, or is it the metal spillover seen here?
I think you're right. I mean, silver has a very high correlation, or admittedly more volatile version of gold. It's a smaller market, as you have identified, much more dominated by retail players rather than institutional players that we see in the gold market. And I think it's really been a case of, if you're bullish on gold, then you should also be bullish on silver. But having said that, I think silver has overrun on the upside. The fundamentals don't really, I think, support the move that we've seen. But it is a smaller market, and speculators, investors often see silver as a cheap option on gold, and therefore with safe haven and other types of buying that we've seen very actively in gold, we're also seeing that in a more exaggerated way, I suppose, in the silver market. But in both markets, gold and silver, speculative positioning is now at quite extreme levels, and so risk of profit taking, risk of a sharp pullback, I think, is increasing by the day.
So, Robin, going ahead for this quarter, what's your sense then? Is it going to be the industrial commodities that you would want to put your money on? The risk appetite is clearly back. We've seen the equity markets jump up as well. The commodity currencies also seem to be gaining. So, is it going to be in the industrial commodities, or would the safe haven investment demand still continue in precious metals?
I think overall, given the uncertainty going forward on the political, financial and economic front, whether it's in the UK or with the US with upcoming elections and uncertain Fed policy, I think it would still be better to be long the precious metals, so long gold and silver. Against that, I would probably want to be short the industrial metals, particularly copper and aluminium. If I wanted or had to recommend a positioning in base metals, then it would not be copper or aluminium. I would pick nickel or zinc because of the supply constraints that we have discussed earlier. So if I had to choose industrial commodities, I think you have to be very selective. I would want to stay away from those that are very much oversupplied, for example, copper and aluminium, to those that are more fundamentally balanced, the smaller base metals like nickel, zinc, lead and tin.
Fair point. Well noted, Robin. Thank you so much for joining us with your sense there. So that really is the view coming in from Societe Generale. Zinc and nickel are their top picks in the market there. And of course, the global political concerns would continue to lead to investment demand in precious space as well.